Good morning, everybody. This is Henry. It is the 23rd of July 2009, and it is about 4:02 a.m. At 4:30, we're going to get the retail sales number coming out of UK. The number is expected to be at a 0.4%, and we're looking for a minimum deviation of 0.6%. So if the number comes out at 1%, that means it should be good for the sterling, and we should be looking at market start pushing the sterling up. And if the number comes out at a negative number, let's say a negative 0.2%, then that should be bad for the sterling, and we should see pound dollar start moving south, start dropping. So that's basically the news part for this trade. So what we'll do is we'll wait for the number to come out. We'll wait for the market to make its first move, and then we'll wait for the retracement. And if we do get a decent enough deviation, and we do see the market corresponding to that deviation, then we'll wait for the retracement and then jump into the market. Now, in the event that we don't get that 0.6% deviation, it's automatically a no trade based on the news, but we might have other reasons to enter the market. So we'll have to make that decision at the time of trading, at the time of news release, and then see if we be able to jump in the market. Now, if we look at today's trend since the Asian Open, we'll see that the GBP USD started the day at 164.31, and it went up about 92 pips to 165.23. So we're seeing a sentiment of traders pricing in this news release by buying the sterling, and that's going to be very interesting, because what we're going to be seeing after the news release will be number one, if the number comes out hitting our deviation, we'll have a clear-cut buy or sell signal. But if the number is a little bit better than expected, let's say we're expecting the 0.4 and it came out at 0.6 or 0.7, not enough to really push the market, but for the people that actually got in before the news release on this sentiment, on this support for the British pound, they might be planning to take profit, and we could see the market reverse from that point. And obviously, if the number comes exactly as expected, that would also be a signal for reversal. Now, if the number comes out worse than expected, and obviously we will see some market selling of sterling as well. So all in all, I think there's a greater chance for the market to be looking at a reversal after the news release if we don't get a buy deviation. So my bias is going to be towards selling the sterling more than anything than to be buying, even though we're seeing a upward trend right now with the British pound, but that's basically market pricing in before the news. Now, if you look at the longer term view of the sterling dollar, we know that the 165.50 area has been a sticky point. A sticking point meaning a resistance area for the sterling. And then 166 obviously has been strong resistance, and then 167.20 area has been another strong resistance. So the upward movement on the sterling dollar is pretty much limited in my opinion, and we should be looking at a reversal at any time. And if the market sentiment is going to hold true after the retail sales number, the next important piece of data will be the prelim GDP number coming out on Friday, and market investors should start to price in that report, and there's a higher probability of further contraction in the UK economy. So the GDP number could come out even worse than the consensus number. And if that takes place, then sterling should really start losing some strength against the dollar, and especially against the yen. So looking at the overall trend, I think we have the catalyst for the sterling to turn around. Looking at the technical side, we're seeing that we're testing a resistance zone in this area, and just based on the explanation I just gave you guys on the numbers, investors are pricing in this news release by buying ahead of the news release, and after the news release we should see a lot of profit taking place, provided if the number is not above the 0.6%. Now if the number is above 0.6%, then we could see investors holding on to their trade with the expectations of picking out even more pips. So that's basically what I think will take place, and in about 20 minutes we will get the news and we'll look at the news live. But if you trade with me before, you know we are not going to do anything hasty. We're just going to wait for the number, take our time, make a good and sound trade decision, and jumping afterwards. And it could be anywhere from 15 minutes, 30 minutes to an hour, even 2 hours after the news release for a trade to execute. But anyways, the idea is that we need to analyze the market and find the best case scenario for our trade. Okay, so I'll see you guys in a little bit.
30 seconds away from the UK data. Again, we'll start off with the retail sales. Month on month expected up 0.3%, year on year expected up 2.1%. Data due out just under 30 seconds. And also looking for the BBA loan for homes purchase, and there are no estimates there.
Less than 30 seconds now.
Again, data coming out any second now. Retail sales better than expected month on month and year month on month 1.2% better than the 0.3% expected year on year, coming in at 2.9 above the 2.1 expected. BBA loans for home purchase coming in at 35.2,000. That's better than the 31.9,000 revised prior figure. We're seeing some downward revisions in the back month for UK retail sales. Month on month revised slightly lower to minus 0.9 from the prior reading of minus 0.6. Year on year revised lower to minus 2% from the prior reading of minus 1.6%. But again, better reading in the headline numbers for retail sales in the UK being higher in the prior reading. See cable right at session highs 165.
The number came out better than expected, 1.2 versus the 0.4 that we were looking at. Newswire is using 0.3 as the consensus, so we definitely hit a buy signal there. However, the back month was revised to more negative, from a negative 0.6 to a negative 0.9. So we do have some conflict there. Pound yen immediately broke above the 156 area, and the pound dollar we're seeing roughly around maybe 30 pips of movement there. Number is definitely much better than expected, but I'm not seeing the kind of movement that usually comes with this kind of news trade. So what I'm going to do is I'm going to stand by. I'm going to wait for the market to settle down a little bit. It's only a minute after the release, and see if there's a chance to getting on a trade. And because the number came out so much better than expected, I'm going to be leaning more towards buying than selling. But I want to see if we get some retracement from this point on to jumping on a buy. And obviously we want to see how far this initial reaction is going to take the pound dollar. That's very important because that establishes a range for our entry. If we only stalls right here at 165.31, which is about 10-15 pips above the high of the day, meaning that we really don't see much of a push here. And if we start getting retracement from this area from this moment on, meaning that there's really not enough momentum to push this trade. I was expecting to see at least a 40-50 pip spike and then a retracement back. Now I'm not seeing that. I'm seeing about a 20-30 pips. So not too sure whether you will be safe to enter on a long trade here. But anyways, the pre-market for the pound dollar, it's around 165.10. Now we're within 10 pips of that. I'm going to give it some time and wait a little bit. As I said, my bias, especially with the sterling, has been on the short side rather than the long side, given that the 165.50 being a very strong resistance as well, judging by previous market movement. So I'm going to be a little bit more conservative here. I want to give it a little bit more time. It's only 3 minutes after the release. Some brokers still have the spread widened, so I want to wait. I want to give it a little bit of time. Right now, whatever we see is just volatility and not real direction. So giving us some time, and the minute I see trade forming, I will come back. Alright everybody, a closer look to this number. We're seeing that from Trader News, the expectation is actually 0.3% versus our expectation of 0.4%. Number came out at 1.2, and the yearly number is actually 2.9 versus the 2.1% expected. However, the prior month to month was revised down from negative 0.6 to a negative 0.9, and the prior year to year was also revised down to a negative 2.0. So with that in mind, the number, although it looks good, it's not really that great. And judging from the immediate market reaction of this trade, if we go to a smaller time frame, let's look at the pound dollar. If we go to a 5-minute time frame, I'll show you guys exactly what I'm talking about. 165.10 was actually the area. The first spike was 29 pips, and because of that spike, this trade actually has the potential to move 50 pips of hitting at least the 165.60. But as I explained earlier, the 165.50 area has been a very strong resistance area, judging by previous market resistance point. And right now we're seeing a retracement down to the pre-release level at 165.10. Really don't have a direction for this trade. Certainly don't want to buy when the market is high. Rather buy if the market is low, so we have more room to work this out. Now I don't know if it's going to make new highs. All I know is that there's a lot of pre-buying, a lot of pricing in prior to the news release, as we can definitely see on a 15-minute chart that market went 109 pips range from the low. That in itself meaning that there's more buyer than seller of the Great British Pound prior to the news. So the only explanation to that is people are pricing in to this better than expected news. So we're seeing some reverse action right now in the market, and we're hitting that pre-release number, pre-release level. And if it breaches the pre-release level, automatically the news trade is a bust. So staying out of the market, I think, is one of the best choices, and staying out of it because the initial reaction doesn't really match the deviation that we're waiting for. It's always good to take a little bit of time than to get into the market immediately, because trading requires patience, and if something doesn't add up, you gotta take a step back and take a deep breather and decide what to do. So market could still have potential to move up, as nobody really knows what's going to happen, but it's just very out of the ordinary for a number this good only see the market jumping up limited numbers, 27 pips, and that's really not that impressive. And let's take a look also at the pound yen, and you can see on the 5-minute chart we'll see something similar. Pre-release level at 68, it went up 38 pips or 40 pips, and then now we are retraced below the pre-release level by 1 pip. So basically there's really no gain after this news. And looking at the pound yen, we can see there's more pricing in before the actual news release, that as we saw the market trading about a 200 pip range, and it basically could mean that we're going to start seeing some profit taking at this moment on, and the trend could be turning down. Because of the number is so good, I'm not going to go ahead and call a sell trade. I'm not going to go ahead and call a buy trade either. It's just one of those trades, one of those days that I feel very uncertain with the market. So I'm going to go ahead and call it a no trade. Even though the number matches and everything, I don't see corresponding market reaction for me to jump into the market. As a matter of fact, I'm seeing reverse market reaction. So for the news part, it's going to be a no trade, but I might jump into the market later on if I see that the market is stalling around an area, and if that takes place, then I might jump in for a sell. So far we see the market bouncing back on the pound yen pair, bouncing back at the 156. So if it retests the 156 and is showing signs of the market, sign of this pair running out of steam, then I will probably take a sell from that point. Okay, I'll be back if that takes place. Okay everybody, based on the analysis made previously and seeing that the pound yen has already retesting the 156 area, I'm going to go ahead and take a trade. I'm going to be selling at 155.98 area. Basically, I like to draw a Fibonacci line, and from the low of the day to the high, and I will be very happy if I can pick up, let's say, the 382 retracement as my first target, 155.22. So if that takes place, I'll be happy. And on a 4-hour chart, I'm going to put my stop just above the 156.47. 156.55 will be my stop. So entry, $55, and I'm gonna go for the 20. So I'm risking about 50 pips, going for 80 pips. And let's see if we can, if we're gonna be able to pick up this trade. So going for at least a minimum 1-to-1 risk to reward ratio. And the reasons I'm sure I have explained already. So let's wait and see how this trade turns out. Alright everybody, it is 9:08 AM. The trade that we took earlier is showing us about 38 pips of profit. I'm going to go ahead and close the trade. So we got 35 pips total. Basically, by able to assess the situation correctly and not going the wrong direction, we're able to put a trade and basically let it work out. So that's another win in our trading book. Well, thank you very much.